This episode of the podcast is brought to you by Flowify. Flowify is far and away the best piece of mortgage technology that I have used. I was one of the first users back in 2013, and it was a game changer when it came to upgrading my client experience. At its core, Flowify is the simplest way to streamline the document collection process with your borrowers. The user interface is simple to use and intuitive, which is great for client interaction and experience. If your borrower can browse and upload an email, then they can use Flowify. It creates buckets of what is needed, what is pending, and what we have, so you can avoid all of the back and forth and the "I already sent you that 5 times" conversations. It automates reminders. It's cloud-based, so you don't have to download a big piece of software that slows your computer down. You can access it anywhere you can get online or even through the Flowify app on your smartphone. The milestone updates provide a simple one-stop communication portal with all parties in the transaction, including buyer's agents, listing agents, escrow or attorney contacts, and transaction coordinators. We've seen it cut down on status calls into our team from realtors and borrowers by about 80 to 90%. There's so much that Flowify does, it's actually hard to keep up. Just recently, they've updated their 1003 loan application to an interview-style loan app instead of just a fill-in form web form. I just did the demo, and it is awesome. I really am excited to get started on it. It's the perfect complement to your CRM and your LOS. If you're like me and your company uses Encompass, it communicates seamlessly with Encompass to avoid a bunch of the double entry work. There's embedded DocuSign within the system. There's account check so you can link to your client's bank records so you don't need to get statements. It goes on and on. So get more efficient. Your processors will thank you. Your underwriters will thank you. Your bank account will thank you. Sign up today and get 25% off your first 4 months by going to flowify.com/sauce. That's FLOIFY.com/SOSS.
There's not one thing you can do that gives people a great experience. It's a collective of everything. And I really think that your overall process is like the foundation. Like if you're thinking of it as a house.
You are listening to the Loan Officer Strategy Session podcast, where top producers answer your mortgage origination questions. To get your questions answered, check out our Facebook group, Loan Officer Strategy Sessions, or submit direct to the website for upcoming episodes at lostrategysessions.com. Now, here's your host, Andrew Sauce.
Welcome to the Loan Officer Strategy Session podcast. I am Andrew Sauce, your host. This week on the show, we had Regan Hagestad out of Manhattan Beach, California. A really fascinating conversation. Regan has a really interesting and genuine model for how he runs his business. We spoke about how he started at as a minor league baseball player and got cut and had no money to his name. So I went to a job fair, tried to hit on a girl, and ended up getting a job at AmeriQuest. Stayed there for a couple of years, and then opened his own brokerage, and now he's a $100 million plus producer out of Southern California. Really, really great guy. I've just met him this year, and I think that he's got some really great stuff in this podcast. You guys will be really interested, especially listen to how he talks about client experience, hiring, as well as his strategy for masterminding with his existing realtor base. So without further ado, I would like to introduce you to Regan Hagestad. Okay, welcome to the show. We are here with Regan Hagestad out of, where are you out of? You're in Southern California, but you're in South Bay.
Yep, out of the Manhattan Beach.
Manhattan area. Beach, thank you. Yep. I didn't know if it was Manhattan Beach or Hermosa or one of the beach cities. So Regan Hagestad, top producer out of the South Bay, Los Angeles area. And we were introduced through a masterminding group that we do. We share a coach, and I thought you'd be a great guest to have on. So again, welcome to the show.
Absolutely. A pleasure to be here. Glad you asked me, and looking forward to sharing whatever I can, help everybody out.
Awesome. So why don't you tell us a little bit about how you got into the mortgage industry, how long you've been doing it, what your team looks like, that kind of stuff.
I don't know if it's necessarily the most conventional way of being in the mortgage industry. In college and then after college, I played baseball, minor league baseball, got let go, thought I was rich. I think I had like $2,000 in my bank account. And a buddy of mine said, well, hey, he was from the Sacramento area. And he was like, why don't you move in with me and we'll find jobs together? And so I said, sure. And he had gotten let go. And I think he had like $3,000 in his bank. And the two of us decided that for like a month, we were just going to enjoy summer. And so that kind of went by really quickly. And then we realized, man, we might need to get jobs. So we went to a job fair. And when we went to that job fair, my degree was in business management and his was in finance. And he always wanted to be a stockbroker. And I didn't really know what I wanted to do. But we went to this job fair. And when we first walked in, there was a really cute girl that was at this mortgage company's table. So rather than like standing in line to interview, I went up and just started talking to her. And she started laughing and says, you need to interview. And I interviewed, I got hired. I didn't really realize what I had gotten into. It was a sales position that had, required like 2 or 3 years of sales experience. I had 0. I never even had a job because in college I was on scholarship.
Yeah.
And so that's how I got into the business. There was a cute girl that I went up to ask out on a date. And next thing you know, I've been in it for 15 years.
That's hilarious. So this is like your first job, only career, really? I mean, outside of like working at Taco Bell in high school or something.
Yeah, like I worked at Sunglass Hut in the summer.
Yeah.
But other than that, this is my only job, only career.
Wow. Crazy. So from a job fair, and who did you first start with? I'm always curious about.
So I got hired at AmeriQuest Mortgage, which is subprime company.
Great. So amazing sales training, but a little lacking in ethics is what I've
and
what I've
it's
heard.
interesting because when I started at AmeriQuest back in 2002, 2003, like end of 02, end of early 03, the boom hadn't hit yet. And, subprime loans were pretty common. There wasn't the stated income. There wasn't a lot of the other stuff that obviously ended up becoming the demise of the mortgage industry. It was pretty straightforward. And, rates were in the 7-8% range.
Yeah.
But people were coming off 10%. And so you were starting to get this cycle of refinances, and they had some great sales training. And I think they were a company that when the chaos really started in 04 and 05, they kind of got caught up in it. They had kind of adopted it, and there wasn't compliance and protocols in place necessarily that you would see nowadays.
Yeah.
I left in 05 and moved to Southern California and started my own brokerage. And so when everything went down, I had been a year or two removed, maybe 2 or 3 years removed from being there. But, I really couldn't have asked for a better place to start because back then, and especially that size of company, I was basically learning and training on the job with an unlimited number of opportunities.
Yeah, you had a lot of at-bats. I mean, that's I think the key, right?
Yeah, and you had as many at-bats per day as you wanted. And so I got a real trial by fire with them, which, helped out. And two, being subprime back then, especially early days, there was no spreadsheet that calculated the monthly payments for you. There was no Encompass system that you type in the loan amount, the interest rate, and it figures out property tax, insurance. There was none of that. So
you had to manually do all that stuff.
Yeah. And so for me, appraisals came in FedEx every day, right? So we'd be waiting for the FedEx guy so we could get our appraisals and we can start getting a clear to close, right? And so it was great with unlimited bats. And then also the fact that I had to learn how to do all this stuff manually, that's really come in handy later on in my career. Yeah.
It's funny how it's almost like learning long division, right? You'll never use it, but just knowing, I think sometimes what goes into it. And I started that way too. I started manually calculating DTI and all of that. And I think instead of just plugging it in to a system and clicking off, okay, we're going to pay off these debts, actually knowing how to maneuver some of the numbers really helps when you're looking at, scraping for debt to income ratio or trying to make a deal work, being a little more resourceful. And I'm not sure if that comes just from personality or if it comes from really learning that way. It's funny, sometimes I'll be working on a deal with my pre-approval. Matt is the guy on my team who handles all my pre-approvals. And sometimes he'll come in and say, hey, I'm trying to make this work. They're trying to get to whatever, 600,000. And I'm only able to get them 550. You want to take a look at it and see if there's something you can do. and he'll have it, he'll be messing around with it within Encompass and clicking off, paying off debts. And maybe they've got other properties and a lot of these things. And a lot of times I'm like, you know what, let's just start from scratch and hand calculate this thing, because I don't want to think I got it there and then have something that was clicked in some weird screen. So I actually think that manually doing that sometimes kind of allows you to work with the numbers a little bit better and knowing kind of what goes into it instead of just letting the computer tell you what's what. And I can't tell you how many times I've probably gotten deals from people that got declined simply because the loan officer wasn't creative enough to figure out how to make the DTI work.
No, I agree 100%. I mean, that's, I do a lot of the coaching and training for our company's branches, and I do all the hiring for our company's branches. And that's one of the first things that I make sure of is the computer system is only as good as what you put in there.
Yeah.
And how many different screens and boxes are there that can impact DTI?
Sure.
Or you're working with somebody who has a cosigner.
Yeah.
Well, you start getting in those screens. If you don't know what the DTI is by hand,
yeah,
how do you know if you really have the right DTI in the system?
Yeah.
So we do a lot of the manual calculation.
Yeah. So I've actually undid the stuff in the system and built out spreadsheets that are a little bit easier to read. But there's nothing like just going through and like, all right, let's just start with income. What is the max, hand calculate it out and really get your brain wrapped around it. So that's interesting. So you went from AmeriQuest and then you started your own brokerage. And that was in, you said like 05, 06?
Yeah. And so I had a brokerage, had an office down here, had an office up in Sacramento just through my network from being in the AmeriQuest days. I think we had 8-10 loan officers back then. And, we were doing like everybody else, just brokering loans. Right?
Yeah.
You'd turn in a broker pack, you'd get approved, you'd get your clients, you'd send it in, somebody else would do the loan. And
T-Bucks a file in.
Yep. And then around that time, I got introduced to my current partners, and they had done something very similar, starting at a company, started a brokerage. They had been very good at the back end operations, and I had been all focused on sales only.
Yeah.
And around 2006, 2007, the idea kind of sparked of, why would we not kind of come together? They had actually started back then working on banking licenses. I had no interest, that thought never even crossed my mind.
Yeah.
Right. And because I just thought the broker train was going to run forever.
Yeah.
And I've been very lucky that they had that foresight, and then that we also got connected because I've been there ever since. And we've kind of taken their operations background with my kind of, let's say, sales background, and mesh the two. And, not saying they didn't have sales, but they were really good and really focused on banking, warehouse lines, the big picture, which kind of is how the industry evolved.
Yeah.
And now we're Fannie, Freddie, FHA, direct. It's been really good.
And do you have ownership interest in that company?
Yes. Yeah.
Awesome. Let's talk a little bit about your market. So it's fairly unique in that you're in a major metropolitan area, obviously Los Angeles area, right? But you specialize in a pretty insular, even maybe incestuous micro market within LA called the South Bay. So talk a little bit about that, and it'd be interesting to see some of the dynamics of, what the real estate / mortgage community is like in Manhattan, Hermosa, that area.
Yeah, it's really unique in the sense that, obviously I'm licensed. I could do anywhere in California, but I would say 95% of my business is within a 15-mile radius. And it's because this pocket of LA is really a unique community in the sense that they kind of nickname it the bubble, in the sense that I don't go north of the airport. And if I do go north of the airport, like that's a big trip. And I don't really go south of Palos Verdes. And this is just in like my normal life. But almost everybody in real estate operates in that same bubble, right? I mean, people that live here, stay here, they own here, they work here. And you don't see a lot like, no launchers in other parts of the country. They have this massive spread. They work with agents on the north part of the city and the south and the west. And one of the reasons we're able to do it is, if anybody had been to LA and know this area, we're jam-packed in. There are a ton of houses. There are not many front yards and backyards. Nobody has acres of land. And so there's a lot of opportunities.
Yeah.
The other reason is, everybody in the industry, whether you're a realtor or a lender, everybody kind of knows each other.
Yeah.
Which is, I think, unique comparative to like Orange County where you're at.
Yeah.
You have a really big radius.
Yeah.
There's East Orange County, there's North Orange County, there's South Orange County, and you can work in all of it. Where we're at, it's really kind of a pocket. that everybody knows everybody and everybody kind of is either been involved in transactions with each other or they do it on a regular basis.
Yeah. It's interesting. When I spoke with you previously about that, because we talked about this mastermind group that you set up with some of your realtors, which we'll get into later in the episode here. We're going to start talking about that. But when I started thinking about your market, it was almost more similar to like a small town, maybe not super small town, but let's say a mid-sized town in the Midwest somewhere, an Omaha, Nebraska, let's say, in that everybody knows each other. It's still big enough where there's a lot of transactions happening, but you're not really going necessarily to other parts of the state geographically to get business. And, contrasting that versus like where I'm at, which is only 20 miles down the road from you, but it is just much more spread out. There's a lot more agents. You run into the same people, but not on every transaction. It's frequent, 50, 60, 70% of my transactions are happening with an agent I've never worked with, at least on the listing side. Obviously on the buying side, I've got a lot more that I'm working with all the time, but it's very common that we're always in front of new agents. I think some of the dynamics, I think there's pros and cons to that market dynamic. I think reputation means just that much more in your market than it would in a market where there's thousands of agents doing transactions. And if you screw up one, you can just go to the next one. So talk about how you maintain that piece of reputation. And also it is a bit of like barriers to entry to other people trying to get in your market, right?
You nailed it on the head. I mean, when you say it's a hometown feel, that's 100% how it is. Like, especially in this market where there's low inventory and everything's competitive, there are a lot of instances where clients will turn in an offer and the agent on the listing side is somebody we work with.
Yeah.
Well, our offer goes to the front of the line. Now, we can't do anything if somebody else offers $100,000 more, right? Because they're going to have to go with the price. But all things being equal, from a listing agent side, that helps us get more offers accepted. The other side of the transaction is it's really nice when, and I'm sure you do this, and everybody that I've ever talked to that does a good amount of business, when you turn a pre-approval in and they submit an offer, one of the first things you do is call the listing agent to introduce yourself.
Yeah.
And it's been really nice because the realtor partners I have are spread out over almost every real estate brokerage in our area. And so in turn, even if I don't know the listing agent, when I make that introduction phone call, it's real easy to say, hey, so-and-so, I know that, you're at Palm Realty, or I know you're at Sotheby's. I just want to explain how well qualified our clients are. And if you have any questions from a loan side, obviously beyond just talking to me, feel free. I have 5 or 6 other agents that work in your office. So we'd be happy to tell you, what kind of service we offer.
Yeah, what their experience level is with you.
And that's been key as well. I think when you talk about everybody kind of knows everybody, it makes you step up your game even more because your room for error is zero. Because it's great that I can have these conversations and build this reputation, but if you screw it up, it goes the opposite.
Yeah.
And when you turn in those pre-approvals and you have a bad reputation, you literally won't get anything accepted.
It's impossible. Yeah. It cuts both ways. It's like leverage, right? It really does cut both ways. And I would say one really bad experience is probably the value of maybe 10 or 15 good ones.
Absolutely. That old Warren Buffett saying?
Yeah.
I think he said something like, it takes a lifetime to build a reputation. It takes 5 minutes to ruin it.
Yeah. And not to say that you're only as good as your last deal, because I do think that you probably have built up enough equity with most of your good agents. Like I know I have at this point that, with my top 5, 6, 7 agents that I work with, I can, not that I want to, but I could screw one up and come and like eat humble pie and I'm still going to get deals from them. But it would only take a few more of those for them to start looking elsewhere. And I've closed, hundreds with each of them. So, and in the market like that, where it's just super incestuous, having that good reputation is really, really key.
Well, so, we're kind of piggyback that to ensure, right? To ensure that you never have that having to eat humble pie scenario. And to go a little into my team, because I know that was a topic you wanted to talk to, is I have my production partner, Matt. I've got my processor, and I went out and hired, essentially she was, in our market, most everything is jumbo, right?
Yeah.
And so I went out and hired, she used to be the underwriting supervisor for Chase non-agency. She's now on my team. And we did that strategically, one, because who better to underwrite a file up front than a former underwriter? Now, she obviously has no sign-off authority or, she's not underwriting our loans. But when we're turning in a pre-approval, it's essentially been fully underwritten.
Yeah.
And we did that because, like you said, I feel like there's zero room for error. And we need to know that when we've said they're pre-approved for this and this is the scenario, I didn't want to have a 90% confidence level or a 95. I wanted to have 100%.
Yeah.
And so we added her to our team, which has been amazing because I just think that with it cutting both ways, we needed to ensure that if an escrow was opened, it would close.
Yeah. And that can come in so many different directions, from a pre-approval, from a knowing what the underwriter is going to be asking for. It also plays through to your client experience, right? Of collecting items at pre-approval and not having any surprises last minute. That's big in terms of getting repeat business and getting referrals out of that, having that really clear, transparent workflow where there's not these last minute surprises. Part of that, kind of a corollary to that Warren Buffett quote that you said was, I always think in let's say a 30-day escrow, you can be a hero on day 1 through 28, but if there's one little thing that goes wrong on day 29 or 30, that can undo a lot of the good stuff that you did as well. So being really upfront with a lot of that stuff is really key to having a great client experience.
Absolutely. And I think too, like this morning I saw a review came on our Zillow page, and it was a listing agent, totally unsolicited, put a review on there. And he basically said he's never been in a transaction where the lender was ready to close before everyone else. And, it was a kind of a perfect scenario. They did the pre-approval process the way we, instruct them to. We had an escrow company that we use all the time, like you talked about, kind of that small town. There's only 4 or 5 escrow companies that we see come across our desk. And over the years, we have a rapport with them. The escrow company was on it. We got disclosures. We had clients that were on top of it. And I think it was like 14, 15 days, we had loan docs to escrow. Yeah. And they haven't even finished a request for repairs yet. And, those types of things, I think, are especially in low inventory markets or a market like mine.
Yeah, it's huge. I want to touch on your mastermind group, but I also want to talk just a little bit more and dive into, before we get off this topic, of client experience. I know in the group that we're in the coaching group that we're in, that's a big topic of discussion, is how do we upgrade the client experience within the transaction to get away from even saying we're going to make this less painful for you and really to make it an enjoyable experience for them. It is an exciting time and stressful time when people are buying a house. And what are some little things that we can do to upgrade the client experience? I'll say on our team, first and foremost, is to avoid a lot of the back and forth, email only correspondence, constant requests for additional documentation. It's a lot easier to ask for 12 things on day 1 than it is ask for 2 things on day 29. So getting a lot of the stuff up front and front loading that is huge for us. What are some things that you've done to upgrade your client experience? Because I know that's a big thing, especially in our market. And I think in general, in the larger loan amount markets, that becomes a big differentiator.
Yeah, and I think that's every market, right? Because the larger loan amounts, you could technically say more is at stake, but it really isn't, in the sense that the client experience and people are people, whether they're buying a $2 million home or a $200,000 home. Yeah. And in general, people want the same thing, right? And I've been working on, and it'll be rolled out here shortly, this coaching website that I put together. It's free, but one of the big things that I go into on that with regards to client experience is there's not one thing you can do that gives people a great experience. It's a collective of everything. And I really think that your overall process is like the foundation. Like if you're thinking of it as a house, right? I think too many times people are picking out tile and window stuff and picking out what color paint, and they don't even have the foundation of the home laid out yet.
Or the foundation is broken.
Exactly. And so the first thing is, I think, the process and having a repeated process every single time. So when a client calls, for the first time, they were referred over, or they found you somehow and they call in. From the time that phone rings until the time loan documents are escrow, until the time they fund, every single thing in your process needs to be the exact same every single time. Because that's how you and your team know nothing gets dropped. That's how you and your team know exactly what to do in every instance. And that's how the clients get the feeling that, man, these guys are really dialed in. And once you have that foundation, that's where you can kind of go into each little section of it. The pre-approval, or the loan just got approved, what do we do? That's where you can start adding these cool little client experience touches. If you don't have the right foundation, all the other stuff isn't really going to matter. Like, there's a lot of different things you can do from somebody always says, one person does this and then they pass it off to the next person, and people talk about the pass off or the baton pass or the handoff. The way that I look at it is, you shouldn't be passing your clients off. They're kind of graduating to the next step. Whereas when people feel like you're getting passed off, I'll give you an example. Like, if you go to a dentist, you walk into the dentist, what is your impression of the person that checks you in? You feel like they're the lowest one on the totem pole, because they're just kind of checking you in, here, fill out this paper. Right? Then you sit down and you have this impression that next person, the usually one that kind of comes in and starts cleaning the teeth and picking on stuff, you feel like they're like the assistant, like the underling. And then all of a sudden the dentist comes in, and there's this impression that that's the guy, right? He probably does less work than all the others. But you just have this vision that he's the guy. And the way that I look at it is, in our process especially, we want to have every single person be the person. That you're not getting passed from me to someone else and then to someone else. We're just transitioning you and graduating you in the process, so that they're working with an expert at that specific thing. And I'll give you an example. Like, my job, when you really break it down, is to know programs, to listen to clients and understand their needs, to understand how to structure those products to meet their needs. And then my job is kind of done. My job is also to help escrows get open. My job is to get them into contract comfortably and confidently. Now, after that, is it really my job to run through tax returns and take PDFs off the download and put them into certain places in a folder? It could be, but I'm not really good at that. That's not necessarily my strong suit, but I've got somebody on my team who really is good at that.
I think as loan officers, we all understand like the concept of like breaking down your activities and doing money-making activities. And I don't want to say my struggle, but I think that the struggle that a lot of people have is, how do you articulate that to a client? The dentist piece is a little bit easier, simply because the dentist is the last one that comes in, right? So it's this buildup. And in our industry, we're if not the first, close to the first upfront people that come in. And then it feels like it's a letdown, because now you're going and you're dealing with the person who's checking you in, right?
So that's how you handle the transition, right? And so the way that I work it is, when we've worked with a client and they're in escrow, we do two things to go to the next phase. The first is me explaining, okay, congratulations, you're in escrow. I'm glad you guys got this house. Let me explain to you how our process now works, and also why we've done it this way. And I always kind of start out with a little story that says, when I started in the industry, I realized that most of the industry has people operating as a one-man band. They have somebody like me who really knows financial markets, who knows where rate, is very in tune with rates and products and good with working with clients to get them a program that they want. But then they also had me doing all this other stuff. And so what I did was I changed how my process goes. I broke it down into different sections, and I went and hired people around me that are really good at those other sections that maybe I'm not the best at. And in turn, as we go through this process, you're going to start working with an expert at each particular section. And so what I'd like to do tomorrow or the next day is I'd like to set up a quick introduction call with my team and you. And they're going to be able to introduce themselves. They're going to send you an email beforehand so you know exactly who to contact for what going forward. And they're going to explain why they are good at each of these tasks and what you guys can expect going forward. Then I preface it with some stuff about, Matt on my team, who's my production partner. Matt was a former accountant at a Fortune 500 company. So I say, the next step's a lot of attention to detail, double checking documents. Who better to do that than a former accountant? Once we get past that stage, we're going to be working on the back end with underwriting, getting the underwriting approval, working with underwriting to sign everything off for closing. Well, just so happens I have Debbie on my team. And Debbie used to be the former underwriting manager for Chase. Who better to talk to an underwriter than their former boss? And then I say I have Krista on my team as my processor. She kind of steps in towards the end. She'll be doing some stuff, but not really involved with you. Krista's been with me for 14 years. She's, in my opinion, one of the best, if not the best processor in the industry. And she'll be working with escrow this entire time to ensure that loan documents are at escrow on time, handling your insurance, getting you copies of closing statements, all of those things. And so as we move through this, you're going to have one dedicated person at each stage who's really good at that stage working with you. And then I asked, is there a good time we can set up a call? And we have an introduction call with every escrow that gets opened. Now,
with your whole team?
I'm not on that call. It's my team and the client.
Got it.
And we have some template scripts we've created that before the introduction call, Matt will send out. And it, basically shows their close of escrow, the important dates of when you have contingencies due, when you need to get us documents by, when you need to sign disclosures. And it lists each team member's contact info, as well as what they are due during the process. And we, on that call, Matt explains that, that email you received is going to kind of be your roadmap from start to finish. If you have questions or need something, go back to this email. Let's take a look at it. It'll tell you exactly who to reach out to for what. And that's how we've created, rather than a pass off, a direct point of contact, but also kind of created it, and we've set it up in a way that they feel like they're talking to the right person all the time, because they are. Yeah,
that's really good. So it's basically an upgraded expectations column. Like, here's what to expect. This is exactly what's going to happen. These are the people that are going to be helping you. Here's why they're good.
I'm really building up those people, right? Because we all know internally, especially when you run a good operation, that the people involved do a good job. That's why they're on your team.
Yeah.
But it's really relaying that and setting that up so the perception the client has of this is what you know is to be true, right? Because I trust everybody on my team and I know they do an awesome job. But when you put yourself in a client's shoes, they don't really know that. They don't know why Debbie's working with the underwriting approval on conditions.
Yeah. Why aren't you doing that? Yeah.
Yeah. And they don't know why Matt's working up front on stuff. Yeah. And when they find out Matt used to be an accountant and they find out Debbie was an underwriting manager, they all of a sudden are like, I got it. Yeah. This makes sense why Regan's not doing it.
Yeah, makes sense. Yeah, no, that's really good. I've been really looking for like a good analogy that I can equate that to. And I've been working on a few, like the, airplane, right? You've got a million things that are happening behind the scenes when you're going on a flight, right? There's going to be a bunch of stuff that's happening that you don't even know about, but you're assuming that are being taken care of. And that's kind of like what we're doing. There's going to be some people that are working behind the scenes on your file, some people that are working on it, but you don't want the pilot going down and fixing the engine, right? You want somebody that's their expert. Even though the pilot might get all the kudos, you want the mechanic who's actually down there who knows how to fix that engine, dealing with that. And then you've got the flight attendants who are kind of telling you what to expect. This is where we're going to go. This is kind of the flight path. This is what to expect. But you don't necessarily have one person doing all of those things. So I'm working on like getting kind of a good analogy to put in people's heads so they don't feel like they're being passed off. I think that's a huge thing. When you have a team, in order to scale, we all understand why we need to have people underneath us that are helping us. Otherwise you just can't scale. And you do become that one-man band. It takes a lot of talent to be that one-man band, but you also look like a goofball doing it. So I don't think anybody really wants to really work with that person. They want to work with people who have a strong team underneath them. So long as sometimes people build out a team too quickly or they don't make the right hires, and the team is a detriment because it is really a downgrade from the level of service that they've experienced when they were just doing it themselves. So I've seen people definitely have growing pains. Did you have experience in that as you built out your team?
I didn't really, but I built mine slow. And what I did was, when I really have refined it over the last 2 years, the whole team concept, and I'm sure everybody's kind of done these exercises where you literally write down on a Word doc or a piece of paper every single thing that gets done on a loan from A to Z, right? And you do it in chronological order. And if you do that, the scaling aspect is real easy to break down in parts. All right, I do the first 10, next person does the next 10, next person does the next 10, next person does the next 10, right? And if you have 2 people, well, now you're each doing 20 things.
Yeah.
If you have 3 people, now you're each doing 13 things. You have 4 people, you're each doing 10. If you add another person, now you're down to 8, right? Like, and so that's kind of the way that I did it. And that's how I think scaling works well, is when you have tasks and you just reassign how few or how many are getting done.
Yeah, awesome. So let's now dive into the mastermind that you've put together with the different realtors that you work with. I thought that was a really unique business strategy that you did kind of accidentally when we talked about it. So why don't you tell me about that a little bit?
Yeah, so like we talked about, almost kind of like a hometown feel in the area. The agents all kind of know each other, and they end up either intentionally or unintentionally working with each other quite a bit. And so I came up with this idea of, a lot of agents like working with other high quality agents on transactions because it makes their lives easier. And I said, well, what is the one common denominator between agents? Because in most part, agents don't call other agents because they're in competition, right? And so I kind of realized that I was this go-between for a lot of different top agents. And I had this idea. I said, what if we got together every 2 weeks and we just sat down and we basically figured out how we could have transactions all together? Because the number one thing that kills agents is they turn an offer in with an agent that they don't know or doesn't do a very good job, and they either get their offer, who's a strong offer, pushed to the bottom of the pile, or they get an offer accepted with somebody who doesn't know what they're doing, and they really end up managing the whole transaction. And I said, so what could we do to maybe make their lives easier? And if their lives are easier, they can do more business. And so I posed this to about 5 different agents, and they were all really into it when they found out who the other agents were. And they said, well, yeah, that person, we've had transactions before, and they've always been easy. They've always been a joy to work with. So we started meeting twice a week, and it just slowly evolved into those 5 agents would release before they put on the market, here's what I've got coming out. Does anybody have a buyer for that? And it's not really a off-market situation. It's just a first look situation. And, a lot of these houses will still hit the market. So it's not as if they're trying to, corner the market or monopolize things.
Yeah.
But it's a huge advantage if you're a realtor to know that this 3-bed, 2-bath is coming out in 10 days. Get your clients in early before anybody else. That's a big advantage. And so we started doing that, and it turned into an agent said, hey, I have another friend that's an agent that wants to kind of join. And then another friend said that, and then another friend said that. And all of a sudden, you're up to 12, 14, 16 realtors that are part of this group. And with me kind of, I would say, I don't want to say emceeing the event. I just more so organize it. I send out the reminder on Monday. We meet for happy hour on Tuesday. Everybody gets together and shares, and I'm kind of that one constant common denominator in there. And it's worked really well. I've had agents that are in the group that haven't sent me business. I've had agents that are in the group that said, you know what, Regan, I'd really like to work with you because, my lender doesn't really do anything like this. Or they've seen value, or another, you're also at a place where, you have 6 agents that, work with you and like working with you, singing your praises or talking through a deal over a cocktail. It turns into a thing where, you look really good. And you still have to deliver, right? But it's a great way to warmly meet new referral partners comparative to what most LOs do, which is show up at their office unannounced with some tacos or some cookies and then beg for business.
Yeah. I remember when we spoke about this because the coach that I'm working with was, I was interested in creating a mastermind event, and I'm doing it, but in a little bit different way. And he suggested I talk to you about this. And the thing that struck me was it came out of your initial wanting to set this up came out of wanting to not have to go to 5 different meetings a week, right? And wanting to just aggregate that for yourself.
Correct. Yeah. I mean, you start thinking about your agents or new agents or existing agents, you have to stay in touch. Like, I mean, you could have somebody who sends you, 2 loans a month for 2 years, and then all of a sudden and you never see them again. That's going to die off. So you have to be in touch with your agents. This is kind of a easy way for me to have a meeting, reconnect, see everybody face to face, shake their hands, give them a hug, and then they actually get something out of it. Because let's be realistic. How many times have you said, hey, let's go grab coffee with one of your referral partners? And you go and grab coffee, and yeah, you reconnect. And it's good to see people, and you have to on that personal level. Mm-hmm. But how many times have you went and grabbed coffee and really got something out of it that's going to help their business?
Yeah.
50% of the time, 25% of the time. Yeah. The other time, you're just connecting socially. This is a way to knock it all out at once because you're connecting socially, right? It's not like they come to my office and we all sit down super serious. We go to a restaurant and have, an appetizer and a drink, right? So we're connecting socially, but they're actually getting something because they're finding out data that nobody else knows yet, all because it's kind of through my sphere of influence.
Yeah. And you've had agents approach you actually that you didn't know that have heard about the group.
Yeah.
It's like this Illuminati, like hidden.
Yeah. It was just like this byproduct of somehow, I don't know if it was on a broker's caravan. Somebody was saying, oh, I'm going to this network meeting tonight. And they're like, what's this about? And they're like, oh, you got to talk to Regan. He kind of runs it. All of a sudden, like, you're like, oh, hey, that Tuesday night group. I'd love to get into that one of these days.
That's funny.
Like, huh. Okay. Like I didn't realize this was the skull and bones. This is
right.
People all trying to work together, and it's kind of just created its life of itself.
Yeah. The entry fee is just 4 deals, and then you'll be able to come in, right?
Yeah.
4 closed transactions.
Yep. And you have to get a tattoo because we all have the same
exactly
tattoo, right?
And CFPB, if you're listening, I'm just kidding. That's not accurate. Anybody's invited. So I think that's a really interesting concept for, especially in the geographic area where you're at, where there are a lot of the same deals happening with, the 80% of the deals are happening with the top, 10 or 15 agents probably, at least on one side of those transactions. So not a lot of outside stuff. Not so sure it'd work as well in my area where there's a lot more agents, a lot more transactions happening, a little more geographically spread out, but certainly a lot of areas in the country, I don't know, St. Petersburg, Florida market. I have no idea how that market is, but my intuition is it's going to be similar to that. Your Omaha, Nebraska, your areas where there are a lot of the transactions happening with a fewer number of big agents.
Well, and I think it could also go another way too. Like, so for your area, because I've had other people ask me about it. I think there's 2 keys though. If you do something along these lines and you do a group like this, is if you're the lender that's kind of the cornerstone or the one who is not emceeing, but organizing, right? Yeah. You cannot ask for business because you're defeating the purpose of why you're doing this. If you get business from it, it is a byproduct. Yeah. You really have to go in with the intention of I'm doing this as a way to help my agents have easier transactions or do more deals or have less stress and free up time. That has got to be your intent. The byproduct could be, like in my case, extra referral partners. Okay. Or kind of a buzz. But if your intent is that, you're not going to have a group together very long. Right.
Yeah.
The other thing is the barrier to entry for the group. You have to start it with the people that you know very well that also are willing to get to know and work with the other people. And after that, you have to let the group on its own decide if somebody can come in or not. You can't do a deal with a new agent that you've never really worked with and then said, hey, why don't you join my Tuesday night group?
Yeah.
And you bring them there, and there's 3 other realtors in this group that have a really bad experience with Sally sitting across the table. You're going to burn the whole group up. And so we kind of have this policy where if somebody wants to bring somebody new, they don't just bring them. They either email it out. We have a group email. They email it out. At the next meeting we have, they pose, hey, do you think Tom would be a good addition to our group? And then what happens is nobody has to be put on spot right there. because nobody wants to face be the bad guy saying, I hate Tom, right? But they email me. And if anybody, and I keep it, that's part of our, I guess you'd say, filter, is that if anybody says no, I just reply back, hey, Tom's not going to be a good fit. I don't point it out and say, Nick said he hates Tom, so we're not going to bring him in.
Yeah.
I just kind of collect it. And as a group, we see if they've got a thumbs up, right? And in turn, that's how we've been able to keep the group together for 3 or 4 years, because I know a lot of people have done network groups or masterminds within the industry. They always seem to fizzle out for a handful of reasons, and ours has been able to stick together because we've kind of set these boundaries. And, I say this with like 100% honesty. When a new agent comes, it's not my intent that they immediately send me business or ever send me business. If they're really bringing value to the table with new listings or new buyers that can help out my current agents, that's enough help for me anyway.
Yeah, that makes a lot of sense. No, I think it's definitely like a jab, right hook type of adding value with little to no expectation of anything in return, knowing that, hey, the more value you add for the longer period and the more you delay in making it look like it's something for you, the long game, you really win on it.
Well, and everybody gets it too. Think of it this way. If you have an agent whose brother is a lender, and let's just say a good lender, right? I'm not opposed to having him come. Now, I know he's never going to send me business, right? But if he's really bought into the concept of the group and everybody likes him and it's a good fit, guess what? When I turn an offer in or a pre-approval for somebody that's going to offer on his listing, I might just get the deal.
Yeah.
Right? That's a deal that I wouldn't have had. So even though he didn't directly send me the business, because he's in the group, he helped us get an extra deal. And so when you're doing this, and I think it can work in like an area where you're at, not so much on the agents working together. That's just the overall theme. But you could have a totally different theme and achieve the same thing. And the example that I gave on one of our branches that I was coaching with, he has an office in West LA and an office in Phoenix that he manages. And West LA can be very similar to what I'm talking about. Phoenix is obviously a completely different market.
Yeah.
And I think it's very similar to Orange County, spread out, lots of agents, lots of units moving. People don't necessarily always know each other. And the concept I had with him was, you can still have a network group, but you can make it, in your case, non-competing markets. So you have somebody in South Orange County that never really runs across somebody in North Orange County, like a good San Clemente realtor, and you have somebody up who does a lot of Irvine. They're not stepping on toes a lot. They're not going to be running into the same buyers, right? So you could have your theme of that network group be around what's working, training.
More
I'm using
strategic.
The CRM, or so you could frame it around something different, and I still think get the same result.
Yeah, for sure. And that has been, I think, that kind of the traditional mastermind group. That's actually what I am putting together, and I've done in the past as well. I just really thought that your approach to it was super unique, and I think would be helpful for people in the right geographic area that wanted to look at setting that up. And I think the keys that you mentioned are super important for people to think about. If you're doing this to add value to the bottom line of your existing agents, and doing that will give you value back, and you're not doing it as a pretense for pitching new people. And then secondly, being really discriminatory against who you are bringing in and letting the group decide, and not having you be the one deciding that. So you're really just putting that boundaries and that framework for the group together. I think all really, really great things.
Yeah, and it's worked well, like I said. And here's your worst thing that comes from it. You get a lot of free brand recognition.
Yeah, exactly. For one night a week. And at the end of the day, it's like you're hanging out with people that you like, right? I mean, so it doesn't feel like work.
Yep, absolutely.
So
it gives you a reason to get out of the office right at 5.
Yeah, that's always easy to just sit there and keep working, right?
Yeah.
We're coming up on our time here. I want to be respectful of your time as well. And I appreciate you coming on the show. You did mention earlier in the call that you have a coaching website that's either up or coming up. Tell us a little bit about that, and how can people find you?
Yeah, so it's called Mortgage Success Blueprint, and it'll be Fully up and running. It's in its final stages now. We're going to roll it out first week of June. And it started out as, when I bring on new branches to our company, I do kind of an individualized branch and loan officer coaching with each of them. I'm not a coach. I don't charge for any of this. This is just part of being one of the owners of the company. And my job is to do the sales aspect. And what I found was over the years of bringing on branches, I end up regurgitating and repeating myself. So I had this idea of, let me just put all this on video. So that way, when a new branch comes on board, I've got just this massive video catalog and video library to share with them. And they can watch a video, and then we can talk how it might apply to them, because that's one of our keys is helping our branches grow from a company standpoint versus a lot of, I think, mortgage banks say, go and find all the tools and we'll just let you do your loans here. Yeah. And when I started working on this, it was actually kind of, it just spawned from conversations with Scott, our coach, was like, man, this is really valuable stuff. Why don't you make this available to everybody? And in turn, it just has kind of taken on its own life where I'm launching this website. It's going to be free for anybody who wants to check it out. And it goes over basically my entire playbook is how I built my personal book of business, from marketing to working with realtors, to this network idea, to what I feel is the perfect process, to, just things that I think people in the industry generally question. And I see a lot of people paying a lot of money to coaching programs that do nothing but give them a CD and say, listen, and there's your success. Yeah. It's, a lot of the stuff that I learned trial and error that I'm just putting on video and making it available for everybody out there. And, the hope, I guess long-term, you say, why would you do it for free? Well, one, it's because our company is using it a lot. Okay. Yeah. But then two, there might be somebody out there that says, man, this really resonates. I've never heard anything like that. And at some point they may think we might be a good fit for them to work at our company.
Yeah. Makes a lot of sense. So it seems like the theme of your business approach is to add value, and what comes from it, right? You just look for adding value to other people's bottom lines. I went to a Tony Robbins conference, business mastery conference, and that was 6 days that could be summed up in like basically 5 minutes of like, just add value, and doing what's right is always the right thing. Like, just look for ways to add value to the bottom line of the people who you are working for, working with, who are your clients, who are your people that you are interacting with. Just if you always are looking at that, then like there's your zero loss can come from that. I think people get trapped up in always looking at the ROI on stuff and what's in it for them, and getting trapped in not looking at the long game.
Agreed. And I think the one other thing I would piggyback on that is I think it has to be genuine too, right? Yeah. You can't contrive adding value to somebody to be nice. And it's hard, right? But like for adding value, too many times I think people are like, oh, you know what? I'm going to do this to add value. Then they're thinking in the back of their mind, because I'm going to get this. That will still come across, and people will see through that and hear through that. Yeah. When you have that, I'm going to add value because I want to do this and I feel like this is a good thing to do. And if something happens to come from it, great. Yeah. You can't do it in a contrived way.
Yeah, it's an authenticity thing.
The only other thing I would say with because that's been my approach, the things that I have done expecting over my career, expecting the least amount of return, have turned the most amount of return.
Yeah, it's amazing. It's funny how like you can blueprint out some game plan of what you are thinking will work, and you just don't ever really know what works until you just go out and do stuff. And it's funny where the most amount of business ends up coming from. It's sometimes the least amount of effort, sometimes luck, sometimes just going out and doing the right thing. And you just have to throw it out there.
My top referral partner, I met him because I started getting involved with the local education foundation for our schools in the area. And he was on the golf committee board with me. And that was 8-9 years ago. And he has sent me more referral clients, best referral clients of anybody, all because I gave my time to working at a charity golf tournament and putting it on to raise money for our schools.
Yeah.
Zero intention. I didn't say I'm going to join this committee because I'm hoping there's a realtor on this thing.
Because I'm going to network and
Yeah, I joined it because I was like, you know what? I'm a golfer. I know how to help run a golf tournament. Like, let me, give some of my time and effort to help the schools.
Yeah.
And there's where it came from.
That's awesome. Great. Well, hey, we're running up against time here. And again, I want to be cognizant of your time. And I really appreciate you taking all the time. This has been really awesome information. And I know that our audience will take a lot of it. Where can people find you if they have questions or want to do any sort of maybe even like a site visit or speak with you about anything that they heard on today's episode? It would be great if they could reach out. What's the best way that they can get a hold of you?
Yeah. So, the easiest is my website is just welcometoregan.com. That's the business website. It has all my contact info on there. It's synced right to my email, so anybody can reach out there. It has all my phone numbers, all that. And then if they have any questions from the coaching and training stuff, the website is Mortgage Success Blueprint. So you can just Google that, and it'll be up and running. I don't know when you're going to release the podcast, but first week of June 2018 is when it'll be live.
Awesome. Yeah. So by the time most people are listening to this, it should be live.
Perfect.
Awesome. Well, Regan, appreciate it again. Thanks so much. And we'll talk to you soon.
Absolutely, Andrew. Thanks for having me.
Thanks.
The information contained in this podcast presentation is for business and professional use only to assist real estate professionals and is not an advertisement to extend consumer credit as defined by Section 226.2 of Regulation Z. Arklatex Financial Services, LLC, NMLS number 22142 DBA Benchmark Mortgage makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Andrew Sauce, NMLS number 259002. Branch located at 140 Newport Center Drive, Suite 210, Newport Beach, California 92660. Contact the branch by calling 949-258-9555. Equal housing opportunity.